Hey guys, what's up? It's McNeil from Louisa Automotive, and in today's video, we're going to be talking about the pros and cons of or the difference between a sole proprietor and a corporation. I'm not going to be telling you like, oh, here's the 10 pros and here's the 10 cons. I'm just going to give it to you in my own scatterbrain, how it comes to me, and in my actual experience, what I went through with having a sole proprietorship at one point and having a corporation at one point. If you're new to this channel, please feel free to subscribe, like, share, and leave your thoughts in the description below. Actually, that idea for this video came from the description below. So we do take into consideration your thoughts. Also, thank you guys on the last video for killing it on the thumbs up. We appreciate you watching the videos and subscribing. And if you're new, by all means, hit the subscribe button. We do appreciate it. And now let's get into the video. So if you are trying to register a business now I know we mostly talk about automotive here, OMVIC, getting your dealer license, all that kind of stuff. But this information is still valid if you're just trying to register a business, period. If you're trying to open up a business, you want to know, should I open up a sole proprietor or not? Now, I'll give you my personal experience, and then we can kind of figure out, I guess, the benefits and that you need to consider between the two. When I first started my business, I started off as a sole proprietor. Sole proprietor meaning that my business would be registered under my name, McNeil Louison, operating as Lewis and Used Cars. This is how I registered my business initially. Now, I guess the reason why I did that, one, it was cheaper to register sole proprietorship. Two, because your business is new, it doesn't have credit or any type of relationships with the bank yet. So the bank's still relying on your personal credit to co-sign and do everything for the business anyway. So I figure, well, if I got to co-sign for the business, I might as well just be the business. Also, you are the business, so which means you don't have to put yourself on payroll. The income of the business is your income. So if you're just getting started, it's easier to do a sole proprietorship. Eventually, as the business started to grow, I chose to flip to be a corporation. Now, when you actually flip to be a corporation, that's where it gets tricky because you lose in all of your financial history that you already built with the banks, because now you're going to be either a number company operating as the same Louis or Used Cars, or in that case, I didn't do a number company. I did Louisa Automotive Inc. operating as Louis or Used Cars. But I would have to start new banking relationships because they literally had to close the existing bank account I had and open up a new bank account because now you're a separate entity. So all of the credit established already, everything that I did with my sole proprietor is lost, and I gotta start all over. So you're gonna be like a new business. You look, even if you were opened up since 2013, even if I was opened up since 2013, the year that I was incorporated, it looks like that's when my business officially started. So that was my experience when I started. I chose to do it that way. One of the biggest benefits is, I think you got to ask yourself. You know, everybody's situation is different, and you need to ask yourself about your assets. So I think the biggest benefit of being a sole proprietor is separating you from the business, protecting your assets from the business. If you have a little bit of money to your name already, or you have a little bit of savings going to the business, it's good to protect your family from your business. Because if you're a sole proprietor and then you get screwed on your business side, you get sued or something goes wrong on the business side, they can come after your personal assets as well. If you are a corporation, you are basically separating you from the business. So if the business goes bankrupt, they can't come after your family house or any assets that you have in your family name. Vice versa, if something happened in your personal life, they can't come after your business as well. So it's kind of nice to separate the two. There is definitely benefits of doing that. The drawdown of being a corporation is the fines are more, so you have to keep that in mind. So because you are now a corporation, the government, your regulators, they look at you like a bigger company. Even if you're the same small mom and pops business, you are technically in the eyes of the government like a Walmart. In other words, you're a you're a corporation. So which means if something goes wrong at your business and you need to get fined or you got a ticket, the price that they normally charge a sole proprietor versus a corporation is significantly more. And also the corporations sometimes get charged twice. For example, in our specific industry, if a dealership does something wrong and you're a corporation, the corporation get fined, and then the manager or the dealer principal get fined, which is still you again. So the individual get fined plus the dealership get fined. If you're a sole proprietor, you the only person get fined, and your fine is also less. So in terms of fines and penalties, you'll end up paying more money as a corporation. In simple terms, just so that this video is not terribly long, I just want to keep it short and sweet. The bottom line here is you got to decide for you. If you don't have shit to your name and you basically just starting off, it doesn't hurt to have a sole proprietorship. You're not building this to be any kind of massive organization. You just want it to be, you know, a small business. You just want to test the business out. It's fine. Do you want to test the industry out, or you want to test whichever business you're trying to do? A sole proprietorship is just fine because it's cheaper and easier to get into. Cooperation is a little bit more expensive, but if you've done a lot of research in the industry and you know you want to do this business for a long period of time, I really recommend doing the cooperation, just because, like I said, at least if there is some kind of growth in that business, you are not the business. You're establishing a different credit. You're establishing credit for your actual business. If your business is successful and you want to sell it, you're not the business. You can't sell it yourself. So at least you can sell the business. It's just kind of nice to have business separated from you. And the earlier you can separate you from the business, I think there's a lot of benefits to that. And I hope that kind of answers your question. There is not, it doesn't make you make more money or less money, or you look bigger or smaller in the eyes of the public, because the public don't really know if you're a sole proprietor or corporation, so your customers don't really care. It's just really maybe based on accounting purposes, credit purposes, just basically having your own assets separated from, you know, your businesses. I think that's the only benefits in doing it. Hopefully this was helpful. Don't forget to
like, subscribe, share.
the like, not this.